Welcome to this week's trading review. This is the third week of January in the year 2023. It's already been an interesting 3 weeks. There's been a lot of fluctuation in the market this week. So we're going to be going over kind of what's going on in the global economy, a little bit in the US economy, and of course, our own individual performance for the week as well. Feel free to sit back, focus up, and feel free to get ready to drop some questions and comments in that you have. Looking to help, and I hope everyone else is having a good start to their trading year. So first, I'm going to go over some charts and my overall performance for the week. I have about 10 markup ideas that we're going to go through. I only ended up taking two. Of those two markup ideas, I was profitable 2 for 2. I did end up profitable 2% up on the account, which would be a $2,000 gain on the account in which I'm managing. So again, I'm really going to go into why out of those 10 ideas, I only ended up taking two. And just to go over a little bit of what's happened this week, it's been a very volatile and interesting week, and a lot of fluctuation, just not really what people were looking for. So we're just going to jump right into the charts here. The first markup here came on Monday morning. This is pretty much right out of routine, right out of building my watch list. This is a short idea on the 1 hour time frame. This is GBP/AUD. I gave this a C setup due to just the fact that there's a lot of traffic within this entry area. We have the low of last week, and being that it's Monday, you should be looking for price to create new highs or lows, but I do always factor that in, especially with the entry being just above that level there. We also have a higher time frame zone in the way as well. And thirdly, we're also within the Asian range, and I do have some divergence kind of telling me there might be a possibility of a change of direction and trend back to the upside. So really having these zones in the way inside the Asian range and the divergence present, kind of letting me know change is coming. Those are really three things to tell me it's probably better to sit out. Next here, we have another one. This is Tuesday morning. This is EuroCAD. Again, this is a very clean chart, and this is exactly what I'm looking for when I'm at the trading desk and I have my watch list built. I'm really looking for this market sentiment line down below to really be in the same zone. It's above the 50 mark here, which lets me know this is in the buy zone. I have all my EMAs giving me bullish direction. I have the higher time frames also telling me bullish direction. So I have 3 signs for continuation to the upside, which is really what I'm looking for. Once I have these signs for continuation to the upside, all I really need to do is just sit on my hands and wait for my signal to present, which it does here. Once you enter here, again, this is a pretty nice trade. You get absolutely zero drawdown against you. And within from 6:45 to around 9 o'clock, you should be in a pretty good amount of profit. At least 3 to 4 are on whatever risk you place. So if you risk 1% here on your account or 2% that some people might do, you're almost up around, we're talking 3 to 6% on a simple trade, a clean trade, where all you really got to do is just follow the trend, hop in at the right time, and let it run. So really, to sum everything up, this is exactly what I'm looking for throughout the year. Finding clean setups, giving me clean ideas as opposed to the one we saw prior. This one here is really just showing a lot of cleanliness in terms of trend, in terms of direction, and as well as the higher time frames as well. There's really no divergence against me. We're broken out of the Asian range, so there's no lows or highs that we need to break here. When these do present, I feel that it's worth entering, and as I have here in the notes, no reason not to enter. So regardless of the amount of risk I feel like placing, I do feel that risk needs to be placed on this markup, being that it's so clean and being that it is very clear. We'll go on to the next one here. This is also the same day. This is just the back end here of this one. So right here is from the 5 minute on the 15 minute. On the 15 minute, we see perfect trend, clean trend here. So sometimes what I like to do is we get a pullback to the 80 MA on the 15 minute. I'll go down to the 5, and that is where this signal presents here. So again, the same thing, the 5 is just keeping the same bias as that previous chart right here. We're trading in this same bias, same direction, same notes as this previous entry. We're just finding another entry here. So maintaining the same bias, same great things, same pros to the markup. As we get this pullback, still in our favor of the trend direction in which we want to see. I'm looking for this pullback to continue to hold the EMAs that are telling me this will continue long. So as I get this pullback here to the 8 EMA, I go down to the lower time frame, which is right here. And yet again, I do get another signal. This signal again gives you 0 drawdown and runs well in your favor for almost double of what you risk. So if you're placing 1% on this, you're almost getting 2% back. If you're placing 2% on this, you're almost getting 4% back on that. So again, these are really the kinds of things to really look out for, and the main things you should really be entering, especially with the kind of markets we have and everything that's going on. I'll be going into some of the things that really might be playing a part here later on in the video. Thirdly, here after this 5-minute markup that goes in our favor on the same bias of the 15-minute, we also have a Bitcoin idea. Bitcoin actually had a strange rip to the upside as of last week, and kind of a correction. What people said with that correction there, was liking the trend direction overall, but I had a few things coming against me, so I honestly decided to sit out here. And this does, due to volatility and the sign of change, wake you out. So we're here on the 1-hour time frame. You do get a nice signal here, a 2-candle formation, telling you, we're looking for longs. The EMAs are nice. The higher time frames are also telling you for longs, but I do have what I said earlier of divergence. Divergence doesn't mean an immediate reversal, but it does let me know things can possibly be changing in the near future, which also could lead to increased volatility or some chop as well. So with those things in mind, I really chose to sat out. Being that we had such a strong rip the previous week before, I really wanted to see some kind of clearer higher highs and higher lows, almost testing new levels. But since then, it's really kind of been choppy, and also building divergence as well. So the main thing for me is just continuing to be picky, so you're allowed to place risk on the highest probability setups, which usually work out more in your favor than the lower probability setups. On to the next one here. This is Euro USD on the 1-hour time frame. Another one, very interesting here. Had some volatility to the upside as of the previous week, so I did want to see if that held. But again, you kind of get a nice zone here where it's just really trading within. It's not really creating higher highs and higher lows. It's really just kind of bouncing around in this box. You can almost kind of box it off here for the past 2 to 3 days of it just chopping around. So it's Tuesday, 7. We get the long signal and just a few knocks here. I did consider this the Asian range broken, but now that I'm looking back at it, there's a lot more errors I'm seeing in this markup, and I'm thankful that I sat out. The signal here, the 3-candle formation, does come within the Asian range. Also, this is not really a 3-candle formation. This is a shift candle, as you see here. From the day prior, the 8 and 21, the 8 is below the 21, meaning the EMAs are in a downshift. When EMAs are in a downshift, we should only really be looking for things to the downside. So it does shift up here, in which we call a shift candle. Any price action candle that changes the direction of the EMAs is called a shift candle. This brings the EMAs of the 8 back above the 21, which makes us look for longs. Now that I'm looking for longs, this is a 7 o'clock entry. We do have 8:30 USD high impact news in regards to inflation. So very keen on things like that whenever there's news ahead of time on any pair you're trading or asset you're trading, especially when you're entering either a few minutes prior, an hour prior, or 2 hours prior. Whenever you're entering just a little bit prior to that news kicking in, it's usually best to sit out because any kind of volatility will end up taking you out. As you see here, the volatility of the news actually doesn't really move price, but as we get to opening bell in the New York session and the stock market open, it drives price down, which in turn gives us this exit signal here. This hard candle to the downside, I would hope you would not be holding and getting out as we get a break of the 8 and the 21 and the 50. I would highly recommend getting out before just throwing away more profits to the downside. So I like to cut my losses quick. And in this case, if I was in this, I'm piecing out here at the break of the 21, and then I'm fully out here at the break of the 50, mainly because I'm fine with cutting my losses quick. Now, if this is going in my favor, I'm going to let it run. But thirdly, the risk reward in this situation could have been much better as well. So I'm happy I had the discernment to sit out regardless, even though I overlooked some errors of the EMAs not being proper, price action still being inside the Asian range, and the risk reward not being very good. So as you kind of tell, when I start to see a multiplication of things hedging against the entry, I'm usually deciding to set out when I have things like the Asian range or divergence or zones in the way or not worthy risk reward. When I get those things piled together, it's more reason to tell me to just sit out and save this risk for better entry. Now, let me move myself over here. So right here we have NZD USD. This is on the 1 hour time frame. I did take this. Two things here due to my entry, risk reward to the TP zone, which is where it has this 70.12. That's the ADR zone. The risk reward to the high of day, or not to the high of day, but to that ADR zone could have been a little bit better, but I did enter on a wick. So I could have had a better entry here. Secondly, I did also enter this on news. So with RR being not the best and entering prior to news, I gave that a heavy 2 knocks, and I graded that as a C setup. C setups get the most minimal amount of risk on any kind of trade I place. I did feel this was still worth entry because of the clean trend to the upside, the higher time frames telling me to the upside, the EMAs telling me to the upside. We were broken out of the Asian range prior on the same day, and we had no divergence, and I really didn't have anything telling me any signs of change or change in trend direction. So I felt placing as minimal risk, which I put about 0.5% compared to a usual full 1% on this entry, and I went along and did so. As we came closer to news at 8:30, I did go ahead and lock my stop just in profit. And from there, after that news candle, I did end up getting fully out about as close as I could to ADR and just not risking much else. Let's see here. Thirdly here, this is another entry. This is AUD USD on the 5-minute. I did enter this one. This is on a Wednesday at 7:45. Let's see here. So this is the 5-minute, which means I got my bias from the higher time frame here, which is the 15-minute. And as we see on the 15-minute here, we have a lot of things in our favor. The market sentiment line is in the buy zone. The EMAs are in a good upshift and telling us to look for longs. The higher time frames are telling us buy. So we have three things all telling us buy, buy, and buy. I also don't have things telling me any sign of change or change in price action. I have no divergence telling me there's going to be a possible change to back to the downside. I have no signs of overbought or oversold near my market sentiment line as well. So it's really telling me there's still room for this trend to continue. Being that I didn't have the signs of a change in trend direction or a lack of continuation, The only issue here was news again on Wednesday. Again, this was a news-filled week. We'll be getting into that in just a second. But being that I saw this clean trend on the 5-minute, I went ahead and went down, or the 15-minute, I went ahead and went down to the 5 and looked to see if I got anything. I did end up getting a signal. I placed my risk. Being I was on the 5-minute, it allowed me to have even smaller risk than I did on the 15. So having a tighter stop than usual, I felt it was worth a B setup. And again, on this one, I locked my stop before the news came in profit. And this one ended up going in my favor as well. Thirdly, just two ideas here on silver. I did sit out, being that I did take AUD USD to the upside and NZD USD to the upside. I felt those were the cleanest markups for the week, being why I gave those my risk, and thankfully they went in my favor. Being that I locked my stop before news, if those do come against me, I would have ended up in break even. This is silver on a Thursday. This does end up playing out pretty nicely. The only thing for me was just the choppiness and the signs of change that I could have had. Not to mention, if I did take this first entry, I would have ended up being in late, which is a deal breaker for me based on the signals and system and rules in which I follow. So the main knocks I have here is the risk reward, not to mention the divergence as well. So being that we have divergence from the Asia low here, the Asia session low is really kind of setting in that tone of where we need to break. The main thing for me is I like to see breaks from the Asian session. So either a break to the upside, a retest of that Asian session with a signal and continue higher is where I'll enter. And same thing to the downside. I would like to see a break, a retest with a signal, hopefully, and then a continuation. In this, it's risky just kind of trading within the Asian range. That's not really something I'm looking to do. Not to mention we have the divergence here set in at the Asia session low. So being that this is a kind of a micro trade where it's within the previous night's session, it already kind of lets me know to expect choppiness and to just kind of sit out and wait for that break and retest. So being that the first one I was late on, the second one didn't really give proper risk reward to even enter. And thirdly, we're trading within the Asian range. I've decided to sit out of these two. This is another one here. This is on the 19th. This is Thursday as well. This is GBP CAD on the 15-minute. Another pair that had a really strong day the day prior. And kind of set in some divergence as well. So prior, on Wednesday, this pair ended up running double ADR. So past its average movement for the day by double. With that known, again, I'm looking for higher highs and higher lows in that trend continuation. I get the break of the Asian range here to the upside, and it doesn't really come down and retest and give me a nice signal anywhere. It does end up giving a signal here inside of the Asian range again, but being that I didn't get that break, retest, and a continuation of higher highs and higher lows with cleaner price action than this, where I'm getting the downshift, back to upshift, back to downshift. And same here, upshift, back to downshift, back to upshift. And just kind of that same chop and mixiness in here, I decided to sit out. I will let you know that that is kind of a key factor there. A year ago or 2 years ago, I would have been in this, but being now, I have a little bit clearer understanding of price action and just spotting the previous day's movement and seeing how much of a clean continuation we have. I was thankfully able to sit out. Another thing here is we have an extremely overbought positioning here on the market sentiment line, including the TDI, the RSI, and the market sentiment. From there, it's just hooking down, and hooking down. I kind of want to see all these angling up rather than angling downwards. So that was another thing. The key thing here is just being super picky. I'm not just waiting for a signal to pop up and I'm taking it because it presented. It's building this pickiness to where when I do enter things, I'm entering properly and with the most probable setup. let's see here. So those are the markups for the week. Just some key takeaways is really being picky and preserving risk. I do want to kind of get into what we are seeing here across the markets. Um, I'm not a fan of really diving into the news because I'm sure most of you know, but I'm just going to run over some things here and some key insights as we kind of move forward. So first things first, most tech companies are really just cutting jobs left and right, left and right. Um, of course, everyone knows keyword for this year was what? Recession. And here is really, it's the first month of the year and we're really starting to see it. We have Google cutting jobs. We have the Fed handling this FTX situation as well. Let's see here. We have another article here. 96% of workers are looking for a new job in 2023. Again, I'm not going to give my opinion on the news, but 96%, I'd really love to see the data and like the proof of where they got this, but that's literally saying the entire job market is looking for news, which is not what you want to hear. Um, Again, we have wages not matching prices that are increasing in terms of inflation. So we have a lot of things here really causing problems. Another company, 20% job cuts. Another company, 20% job cuts. A third company, 20% job cuts. A fourth company, layoffs in tech and banks will have a ripple effect into other industries. So we're really starting to see the beginning of multitudes of job cuts, layoffs, and now people are waiting to see where and how these are going to reflect into other markets aside from banks and tech, where it can ripple from. So those are some key things to note as well in terms of the news. For this week, the main factors here were the USD PPI, the core retail sales, getting some terrible numbers here. Retail sales down for the month of December. Day prior, the CPI was better, was a good thing to see, but I really don't think it's going to make a difference. And again, the manufacturing index almost doubly bad is what they expected. So we have a lot of negativity coming in. So I really just want to see some people aware. Going into just the broader markets here, this is the Dow Jones. If we just look back at the beginning of the week here, if we go to Monday, and I get my measurement out. If we go to Monday, let's go to opening bell Monday to where it ended at the week. It is down about 850 points. The S&P here again, from its highs of the week to where it ended up today, was down about 420 points. The NASDAQ here, from its highs, it did bounce back pretty nicely today, but still down about another 50 points. So with these key market events happening, it's very good to be up to date. Be aware of the news you're trading into. Kind of start to factor these things into your trading plan and your risk management scenarios, like for news, locking your stop prior. But for me, the main lessons I'm learning is focusing on the process rather than the outcome of the trade. When I'm focusing on the process, I'm focusing on these minimal things, and it's allowing me to be picky. It's allowing me to spot trend direction and avoid setups where it could look nice, but I could be pickier, like things not being in the Asian range, having oversold or overbought, or not proper risk reward. So the main takeaways for this week are just process focused rather than outcome focused. There's tons of signals that can arise if you just jump in all these because you're tying your emotions to the outcome and the chances of winning. You're not really going to get far, and you're going to end up taking a lot more losses. So overall, every week I try and make each week a good learning experience and build off every week with what I've learned from, what mistakes I've made. I am going to be keener next week on avoiding news and things like that, because you still have slippage and things like that, where even if your stop is locked, you can risk your account. But looking ahead to next week, with those news and those things kind of set in stone, I kind of see Friday's recovery as a little bit of a retest to the upside and then a continuation lower as we go into next week, especially with the news that kind of kicked in here in terms of layoffs and the overall performance and outlook for the year. So that's going to conclude my weekly trading review. Thank you for joining me. Please feel free to ask questions, comments, anything, drop them in the chat. Reach out to me on social media. If you're interested in these courses and the signals and systems in which I'm trading, these are the ASFX systems. I'll be having a link in the description of the video. And as always, be safe, stay safe, make profits, kill it this year, and never risk more than you can afford to lose. And happy trading.